that the liquidity in the market is draining quickly, and the bank term funding program expires down to zero the day after the election. The liquidity will be as low as it was around the repo market problem. There's just so many boiling points. You know, the open borders, the contesting of the fairness, whether or not we believe it. People do believe that the elections may not be fair, the judicial system may not be fair. I'm not saying I do, but people do. None of this is lost on the rest of the world. And then you go around creating 100,000 in debt every second. 1, 2, 3, 4, and keep on going till your fingers fall off. That's how much debt we're creating, $1 trillion every 90 days. And then we weaponize and we sanction and we intimidate. And then we do this with the, you know, with the BIS. Our image around the world is probably the lowest it's ever been.
In today's news recap, the current surge in gold prices has been driven primarily by investment demand. Amid the recent rally in the market prices, investors are increasingly adding gold to their portfolios. This tendency is most likely the result of increased geopolitical tensions and ongoing conflicts around the world. Furthermore, expectations of Federal Reserve Fed rate cuts has helped the gold market, as a lower fixed rate income would mean good news for gold investors. The most recent U.S. personal consumption expenditures PCE price index data reaffirmed these rate cuts expectations. It, along with the gold market's existing positive consolidation period, suggests that gold prices will follow the path of least resistance to the upside. Still, the demand for gold is affected by more than just the currently prevailing macroeconomic conditions. Figures published on this Sunday revealed that China's manufacturing activity has increased for the first time in the past 6 months. This favorable news has improved investor confidence, reinforcing the current risk-on conditions. Given such positive factors, the gold market is not without risks. The Relative Strength Index, RSI, on the daily chart is currently showing overbought circumstances. This could lead to some short-term consolidation or a slight pullback. But overall, the gold market in 2024 does seem positive. Now we'll show you more clips, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
The reason the Polish National Bank buys gold is because when someone shuts off the power, this is paraphrasing, but very close. When someone shuts off the power to the global financial system, a system where all financial records are stored electronically, we own gold to help our economy rise from the ashes. Now, we don't expect that someone will shut off the power to the global financial system, to the grid, but it's the duty of the central bank to be prepared for, I mean, it's like one of these things, it's like, is this a crumb that they drop at your feet? Are we supposed to, are we supposed to take that at face value to hear a central banker say, everything is stored digitally? It's kind of like the story of the DTCC and all the assets held there. You wonder what are these countries actually thinking, and are some of these central bankers, saying these things to clear their conscience, to drop a little crumb? I just found that to be very interesting. And if you haven't read The Great Taking by David Rogers Webber, watched him narrate his story on YouTube, you understand, I think, deeply the concept of counterparty risk in a systemic world. And it's growing. You look at what happened in Lindsay, Oklahoma last week with the bank failure. I would argue it was the first bail-in in the United States, and not a word from the media, not a word. And it's a bail-in. And these things are beginning to become systemic. And I think, you add into it the pressure that's mounting across the globe, countries pushing back against so many of these things. We don't have our act in order at home either. So this, to me, when you talk about potential risks, it is of a counterparty risk nature. And that's one of the things that I think is most often overlooked when we talk about gold and silver, is that it's assets in your own possession that are no longer or at simultaneously no one else's liability. And so that's a big deal in my mind. And I think that's a big deal in the BRICS mind too, in that, as you can see, even trusting an entity like the BIS proved to be a liability, and they had counterparty risk there. They'll start to just in-house all of this stuff and build their alliance free from any Western interference. And it's funny because in their statements, they talked a lot about the WHO, the IMF. They said they wanted a new Bretton Woods, but they strived to be within a framework of the IMF. They wanted to assimilate. Instead of being coercive, they were actually, which was kind of weird to me, kowtowing, it seemed, to the West. This may put a fork in all of that and just accentuate the differences and the divisiveness between these two groups. That's for sure. But yeah, I think there's a lot coming down the pike, and what happened in Lindsay, Oklahoma is just the tip of the iceberg. And that is moving towards consolidation, moving towards new systems, a CBDC, a reset. Who knows what it is? But what happened in Lindsay, Oklahoma, to me is actually absolutely crazy. And I think it's really interesting when you go back to the bank failures of Silicon Valley Bank and Signature Bank. And when that happened, the inquiry at the House, it was the Oklahoma senator who questioned Janet Yellen, Madam Secretary, you just bailed out these banks. Of course, Oprah Winfrey's money was in there. The tech startup money was in there. Hollywood money, big money, hundreds and hundreds and hundreds of millions in uninsured deposits. We're in there. You bailed these banks out, Madam Secretary. The Dodd-Frank Act that was written a few years ago, 2009, said that's illegal. What am I missing? Well, you're right, Senator, she said. It is not something that we're supposed to do. People who deposit money in banks are unsecured general creditors, i.e. last to be paid, and it is supposed to be bailed in. You're right. However, it was an uber majority vote between myself, the FOMC, which would be the Federal Reserve, the FDIC, and the president. We determined that these banks were too systemic. They needed to be bailed out, not by the taxpayer, but by the FDIC. And so he says, well, am I to interpret then if a bank fails in Oklahoma, my constituents will be made whole? No, Senator, they will be bailed in like the law says. So, you look at the banks that have failed subsequently to Silicon and Signature, they've all been gobbled up by JP Morgan or other regional banks. And during the Dodd-Frank Act, they put bail-in legislation. For those who don't know it, you should Google it. Bail-in legislation, Dodd-Frank Act, anything over FDIC, which, by the way, only has about 140 billion in assets, backing 18 trillion in deposits. Anything over that amount goes into the bank to be bailed in, goes into the kitty like bankruptcy. But they also said something else as a footnote that I think a lot of people really should know, and I think it could even be a bigger problem, and that is money market gating legislation. Because when Lehman Brothers failed, they held a lot of the money market funds, and everyone tried to yank their money out. It's called breaking the buck. It turns the money market upside down. You don't even get your principal back. Well, there's a lot of institutional money in the money markets, pension funds and insurance companies and whatnot. But over the last year, with higher rates, it's drawn record amounts of money, almost $7 trillion in the money markets. And it's probably even lesser known than bail-ins that if that happens again, if there is a collapse, the money markets are gated. You can't get out. You ride down to the bottom. And people should be aware.
On the technical analysis side, silver price shows negative trades to move away and support the chances of continuing the expected bearish trend on the intraday basis. And the way is open to achieve the next target at $30.63, which represents 50% Fibonacci correction level for the rise from $26.41 to $34.85. Thus, breaking it will push the price to suffer additional losses that reach $29.64. Holding below $31.63 represents the first protection factor to the suggested negative scenario, as breaching it will lead the price to achieve intraday gains and test $32.86 before any new attempt to decline. Let's get back into the episode.
Aware of that, but going back to Lindsay, Oklahoma and the bail-in legislation, this little podunk town in Lindsay with only 7 million in uninsured deposits, just 7. The bank shuts down a week ago Friday. and they cite fraud. They cite that their assets were far less than their liabilities to depositor or to creditors and others. You are a creditor when you deposit money in a bank, an unsecured general creditor, last in line. So it said their assets are less than their liabilities to creditors and others. Well, who are others? I don't know. But it said that the bank would be taken over by like First National Bank of Duncan or something along these lines. And the insured deposits would be made available Monday. That was this last Monday. They'll be made available Monday. The uninsured deposits, half of which will be made available Monday. The other half possibly will be made available when they sell the assets of the bank. If you read the Dodd-Frank Act, they have 4 years to do that. And again, uninsured, they really don't have to do anything. But when they say possibly, remember the assets were far less than the liabilities to creditors and others. You can kiss out if you had $1 million in that bank because you're going to buy a new house and $1.25 million house and you put the $250 down already. You got $1 million in your account waiting to continue to pay as your house is built. You get your $250 back. The uninsured portion is $750, half of which is $375. You get $6.25 back. The uninsured half plus the $250. That other $375, you might as well kiss it goodbye. And this was nowhere reported. You got to dig for it on the line. And it's the first bail-in. And I would argue it's a trial balloon. They're throwing it out there. Only 7 million in uninsured deposits, yet hundreds of millions in Hollywood and tech startup business gets bailed out in uninsured deposits. But the average Joe and Jane American in rural Oklahoma, well, they're screwed. These are the kinds of things that I think, again, are all pulling in the same direction. You talk about banking issues. You talk about money market gating. You can look at the fact that the liquidity in the market is draining quickly, and the bank term funding program expires down to zero the day after the election. The liquidity will be as low as it was around the repo market problem. There's just so many boiling points. The open borders, the contesting of the fairness, whether or not we believe it. People do believe that the elections may not be fair. The judicial system may not be fair. I'm not saying I do, but people do. None of this is lost on the rest of the world. And then you go around creating 100,000 in debt every second. 1, 2, 3, 4, and keep on going till your fingers fall off. That's how much debt we're creating, $1 trillion every 90 days. And then we weaponize and we sanction and we intimidate. And then we do this with the BIS. Our image around the world is probably the lowest it's ever been. And when you realize that if we had our act in order at home, if we had a strong banking system, if we weren't divided, if the institutions that are the hallmark of this country, the FBI, the elections, the judicial system, the border, immigration, where everyone came here and contributed and assimilated and did so in a very, honorable way. All of that stuff isn't lost on the rest of the world. And I think this is the most charged time ever. And what they did, the West did, to derail the BRICS at the 12th hour, I think only is going to strengthen the resolve of countries that are already looking cross-eyed at the West. And I do believe that, Jay. It is a setback for them for sure, but
what do you think of today's show? Do you agree with Schectman's take on the mounting pressures within the banking system and the importance of securing wealth in these uncertain times? Andy highlighted the vulnerabilities in traditional banking, from rising interest rates to shifting global alliances, and why precious metals like gold and silver are increasingly seen as safe havens. Let us know your thoughts in the comments, and be sure to join us next time as we continue exploring these critical financial trends and strategies to stay prepared. Thanks for watching.